And we're going to have, I'll kind of kick things off with some frequent angel investing topics. And I'll try to run through that somewhat quickly so that we can get to the more fun, interactive portion of the workshops. So we do have a section at the end where we'll save some time for Hannah to answer any questions, but feel free to throw questions into the chat, or we can wait until that moment to open up the mics as well. But okay, let's take a look at the results really quickly. All right, most folks have not ever invested before. This is perfect. We will go through some of the 101s with you all then. All right. So thank you all for joining the workshop today. My name is Rohini Pandhi. I'm a product lead at Square, and about 5 years ago, some friends and I co-founded a nonprofit called Transparent Collective with the mission of helping underrepresented founders get access to Silicon Valley resources, mentors, advisors, that type of thing. And we've had some amazing companies come through our workshop over the years. We've held our sixth showcase is coming up next week. Helped more than 40 founders raise north of $30 million total. And by the numbers, our cohorts are almost 55% women-led, 70% Black founders, 10% Latinx, and most of these founders are building tech companies outside of California. So that's been just a fantastic experience. Loved mentoring, advising companies. And so in the last couple of years, I've started using my product expertise to vet and help additional startups through angel investing. And I'm sure most of you already know Ha, the brains behind Product Leader Summit, but I'll also let her give a short intro as well.
Hi, everyone. So I'm Ha. I'm one of the founding partners of Spiro Ventures, and my path to angel investing was interesting. I started after becoming a venture capitalist. So I became a venture capitalist first, and then ended up angel investing in deals that Spiro couldn't do, where I had conviction around the founder. And sometimes we can't do a deal for many reasons, even though it's an awesome founder and an awesome company. It could be that it's outside of our thesis, it's too early for us or whatever. And so my path to angel investing was the reverse, I think, of like a lot of other venture capitalists. So I started as first as a product leader, then a VC, then angel investor. So anyways, thrilled that all of you are here, and hopefully you learned a thing or two.
Awesome, thank you. All right, so one of the first questions that I feel we always get is, how do I know if this is the right thing for me to do? Before I even start angel investing, how do I make sure that this makes sense for me? And so it really just becomes a risk-reward trade-off. And I think there are a lot of rewards, but I just want to also kind of highlight some of the risks that you all should be aware of before writing your first checks. So first, mentoring, advising, and helping entrepreneurs and the new generation of leaders can be really inspiring and fulfilling. And selfishly, I think angel investing is a great way to learn to be a better product leader. Someone once put it to me that as a PM, you kind of see your functional area, and then as an investor, you see different high-level strategic areas, and those that can connect the dots between the two become really powerful product leaders. You also get to meet a lot of other amazing angels that have such interesting day jobs, other operators where you can share notes on companies or get their takes as industry experts. And so I find it to be a much more collaborative and engaging way than traditional networking events to meet and connect with folks. And then, of course, you could pick the next unicorn. So that would be really fun and financially rewarding as a great reward to think about too. But that said, these are really early stage startups. There's a lot that can happen that stops a seed from seeing the light of day, let alone growing into a flower or an entire garden. So treat these investments as in a balanced portfolio strategy that almost assume that you won't see any of the returns from these investments, just to play conservative. And because of that first risk that most companies won't make it out of their early stages, you will have to do a bunch more deals in order to get enough at-bats to make economics work. So instead of making one $10,000 deal, maybe think about focusing on $10,000 deals so that you get more at-bats. And finally, Uber didn't become Uber overnight. So these investments need time to grow. So don't put any money into the ventures that you'll need back in a year or two. Think of these early stage investments in a much longer time horizon. And so if you do want to do it, I guess the next question becomes, how do I know if I'm good at it? And I think there's really three primary things you need in order to be an angel investor. First, you need to make sure that you have something to invest, either your own capital or someone else's. Second, you need deal flow, and you can look for deals proactively through your own networks of friends or other founders you know, coworkers, investors, or you could get pulled into deals and start seeing pitch decks just based on your subject matter expertise. So either as like a well-known product leader or someone in a specific space like fintech or someone passionate about D&I. You can really just write on your angel list or LinkedIn profile that you're an angel investor, and I can almost promise you that you'll get some random inbound pings from that tactic alone. I think I've seen just this week maybe 2 or 3 decks from random LinkedIn posts. And then finally, kind of speaking of like that expertise angle, you can also use your product skills and intuition to your advantage to select good investments. Pick the product or the team or the market that you think is going to be something that people want or need. And since you all are here at this Product Leader Summit, you clearly have that expertise. So let's kind of focus on the capital and deal flow pieces next. Okay, so on the capital angle, since these are riskier bets, you don't want to go all in with startup investing as the majority of your financial portfolio strategy. The rule of thumb is to deploy no more than 5 to 10% of your net worth. And most founders want to keep their cap table clean so they don't have like hundreds of small check investors kind of mudding up their paperwork. So typical check size is usually 25K or at least a minimum of 25K. But I've gotten into deals at a much lower minimum because I've offered my time and expertise after all the fundraising is done. And that's really meaningful to founders. So leverage your own skills and experience in those discussions, because you can kind of say, you know, I'll come in at a much smaller check, but you can call me or email me anytime. We can talk, we can brainstorm these things. And that mentorship and advising is even more valuable to certain founders than an extra 20K. And then if you don't have that much free cash to spend over the next few years, you can also check out syndicates. They're a great way to learn about a deal without having to do any sourcing, any due diligence. This is how I started. You can join a bunch of public syndicates on AngelList and just watch the deals that the bigger angels or syndicate leads bring to the table. If any of them excite you, you can usually get into these deals with a much smaller minimum amount on a platform like AngelList. Plus, you get to see all of the due diligence and the notes that explain why that syndicate lead is super bullish on this particular company or space. So you kind of get free homework done for you. And then finally, you do need to see quite a few pitches before you know which of the startups you want to commit to. So you probably want to aim to invest in 8 to 10 startups over the next few years. So again, these are long-term commitments, so make sure you're choosing your time and you're taking your time and choosing wisely. All right, and then in terms of the deal flow angle, let's talk about the areas you might want to look at when evaluating startups. Some questions you can ask yourself are, who's the founding team and why do they have a unique advantage in this space? Is the market that they're playing in big enough? What is the product and why or how is it better, faster, cheaper than current solutions? And then what's their distribution strategy and how does the startup need to approach their GTM? Is it feasible? Do they already have some traction? There's a lot of areas that you could probably drill into within these 4 categories. And we'll actually use this rubric in our workshop in a few minutes. So you'll see this framework again soon, and you'll all be able to get access to the detailed questions. Do you want to go through the diligence and closing pieces?
I would love to. And if you wouldn't mind just keeping up the slides and helping me as I go through it. So let's go ahead and talk a little bit about, once you've met a founder, how do you know that, or how do you develop conviction around the founder and the opportunity to decide to come in? So the first is, is for me, checking out the product. So I tend not to invest in anything that's pre-product. I do want to see the product out in the market, and being a product person, I want to develop my own conviction around the solution that founders are bringing out in the world. And of course, we're all product people. So I think we have to personally love the product, even if we're not the target user, but have conviction around it before coming in. Even as an angel, I do like to do a couple of customer reference calls. Now, the founder may not want to give you the list of customers for such a small check, but like I'll try to find a prospective customer in the target market and talk to them to really understand, is there a real pain point here that the founder is solving? You know, is there a need in the world? And do I believe that this solution is 10 times better than what's out there in the market? And of course, you know, the founder is always going to pitch to you sort of the size of the market and his financial projections, or her financial projections. But I do think that it's important for you to do your own research around the market size and opportunity, whether you believe the financial projections that the founder is sharing, even maybe connect with a couple of experts who are industry experts and talk to them about whether whether this is unique in their industry, or if there's 100 other competitors, right? Because oftentimes you're investing in spaces that you may not be all that familiar with. So definitely think that you should do your own research. And then before writing an angel check, I always like to at least do one more meeting. Without wasting the founder's time, I do feel like there are ways as product leaders that we can be helpful to founders, even if we decide not to cut the check. So I always suggest to founders, do you want to do a product whiteboarding session, right? Where we can go through like, who is the target customer? What is the need or the pain point? What is the solution? How do we know it's 10 times better? What's your go-to-market strategy? Let's talk about like your revenue model. And I think that you'll just learn a lot in that session. And it will help not only demonstrate your value add to the founder, but hopefully help you decide around your conviction on this founder, or even, maybe you'll do the whiteboarding session with the founding team as well and develop conviction there. And then if you decide to invest, just a couple of notes on closing. So you'll most likely be writing a check. So Rohini, go ahead and scroll to the next point, but you'll most likely be writing a check into like either a safe or convertible note. And it's unlikely that you'll know the true valuation or the price of the round. So what a safe or convertible note is, it's a debt instrument that converts to equity in one of the future financing rounds when like an institutional investor comes in and prices the round and sets a valuation on the company. Oftentimes we'll be investing with a safe or convertible note that will have a valuation cap and then a discount. And so that the cap and the discount sort of rewards you for taking a risk early and placing a bet on the founder early. And so oftentimes you'll get in cheaper than if you were to wait until a priced round. And I often like to wait until the round tips before wiring the money. So you don't want to be the last $25,000 check into an investment. So if the founder is raising, say, $500,000 or $1 million, I like to sort of see at least half of the money either committed or soft circled before wiring. So I think the last slide, Rohini, if you would mind jumping. So if you want to get started in angel investing, I think one question is, how do I see deals, right? So if you update your LinkedIn to say that you're an angel investor, I promise that you'll start seeing lots of folks messaging you on LinkedIn with their startup opportunities. So that can help you start your deal flow. I also recommend writing down your thesis memo. So maybe start in an area that you're excited about investing in. Maybe it's it's in the industry that you're working in now, and write your own thesis around what you think the markets or the trends are going to be and why you're excited about investing in this area and why. It'll help not only clarify your thinking of like whether you should come into a deal or not, but I also think that if you decide to publish your thesis out in the world, founders who connect, who are working on that market or connect with your thesis will definitely reach out to you. The other thing that Rohini and I like to do is just share or put together a one-pager of how how I can help founders, right? And if you share that with founders and just show that like you're more than just capital and you can really add value, I think that that will certainly help you not only see deals, but also win deals as well. And last point, if there's interest, and we'll send out an NPS survey afterwards. And one of the questions that we'll ask is if you have any interest in forming a product leaders angel investment group. Rohini and I are willing to start one. And the idea might be that we'll meet monthly on a Zoom call and talk about deals that maybe any of us have seen during the last month. And, and we can talk through like merits and risks of a deal. And it'll be a good way just to sort of see a lot of deals and just kind of learn the mindset of like what it means to be a great angel investor or VC investor. So with that, we're going to just open it up for about 4 or 5 minutes of Q&A. So let's see, let's go into the chat. So are there any questions? And then also, by the way, it's a small group, so feel free to unmute yourself too and ask. So I know Tom's question on the chat was, how do you get connected with the syndicate? So Rohini, do you want to share like how you got connected on Angel List with different syndicates?
Sure. Yeah, actually, a bunch of them are public. The syndicate leads love having more LPs or investors in their groups, because that means when they do have allocation to a hot deal for like, $100,000, let's say, then if they have 100,000 or if they have 100 people, everyone can just put in $1,000 and they hit their minimum to get the allocation done. So there are a bunch of public syndicates that I would say just sign up for, because there's really no downside to just getting added to their list. You see all the due diligence notes and you get to kind of check out how they're thinking about things. And you could even use it as a way to, like, for me, it was almost like if I did put in some money, here's how I would about it. And then I'd look at their notes and see if it kind of, if we agreed on like the market opportunity, the founding team, the traction, that kind of stuff.
Angelica has a question. Angelica, you want to just go on the screen and just ask your question?
Hi everybody. My question is just around the appetite for international or cross-border deals, particularly at the angel stage. I mean, I would imagine that there's reluctance just based on kind of regulatory frameworks and sort of reluctance to invest kind of outside sort of individual countries or regions. So yeah. I sort of get the sense that a lot of kind of investment is pretty jurisdictionally based, but just curious kind of what your thoughts were.
Yeah, I'll even talk about it just not only just for me, but also for Spiro Ventures. So we only invest in the US, and beyond just sort of, not really understanding the legal jurisdiction and the markets outside, we really want to roll up our sleeves and be helpful to founders. And we just feel like, just having the founder either geographically close by or at least time zone, it's easy to connect with them on Zoom, et cetera, to be helpful. And also being able to know the markets, maybe be able to do like network introductions or customer introductions or whatever can be just helpful. So so we constrain our investments in the US. I mean, certainly I do know angels who do cross-border investing and they're more comfortable there, but I constrain my investments to just sort of, what I know and understand. So.
I was going to say, from a emerging markets or cross-border, I mean, what I found is syndicates are actually pretty good for that. And a lot of those companies really value the advisory. So to Rohini's point about not just writing the check, actually a lot of the work I've done is working with founders like in Africa, mostly through Google Ventures or other companies who are looking for operators that know the market. So I've actually found like working through some other person who's in the market or knows it well, that's trusted, and then writing a small check to that group, I found to be super helpful.
I'm going to just read off Gudo's question and then and just quickly answer that. And then maybe we'll have Rohini take Jessica's question. So Gudo's question is, what are the common mistakes that product people make when investing? So I'll tell you that what I think one common mistake is writing too many checks. So these investments do take a lot of time and care, and I think you learn a lot in the process of investing. What I would recommend is before writing your first check, maybe even talk to 10 or 20 different founders, and develop conviction around like one founder before writing a check. Or certainly you'll learn a lot more by writing checks too. So like if you're going to start writing lots of checks, write small checks and learn, and use that as a learning opportunity. And kind of what Rohini said, like expect to lose all of your money in those early checks, but hopefully, you've only written $1,000 or $5,000 into maybe a deal or a syndicate or whatever, and use it as a learning opportunity. But writing too many checks as a new time investor, I think, is a common mistake. Rohini, why don't we take Jessica's question, and then we'll go over to Eugene.
All right. Yeah. And just to plus one what you said, I think one of my common mistakes when I started was also getting too excited about a deal. So I talk to a founder and I get super pumped and then want to put the check down immediately. So going back to Ha's point of at least have a second meeting, sleep on it, is another thing that I've started to learn to force myself into doing. But I think Jessica's question around what is the composition of an angel round? Is there a lead or normally a bunch of small checks? Do investors at that round interact with each other? So usually, I'll say what the typical thing that I've seen is usually there's a lead investor, a seed investor that wants to take up about 10 to 15% of the round or ownership. And then depending on if there's co-leads, something like that, they're usually the institutional checks that take up most of the pie. And then the founders, especially experienced founders, will leave a certain allocation for strategic angels. And so they want more angels. They might even like say, instead of 25K, can you do 15K if they have too many angels? But they do know how to kind of set up their bench to have the right operators to be able to like call up whenever they need some help. And so there's only, I think, like pre-seed, maybe you'll get a bunch of angels. In the seed round, you might get a lead plus a bunch of angels. And then investors sometimes talk to one another. It's me just asking the founder, like, who's another investor, angel, that you found to be really helpful? Because I want to connect with them too and hear how they operate and what they do. And so I'll ask who the other angels are if they're comfortable sharing.